Cool.
What's going on, everyone? I hope everyone's having a good day. Happy Friday to everyone here on the stream. For those of you that might be new to the stream, my name is Sean. I'm one of the co-founders of Predicting Alpha. And guess what? Today we are joined by the other co-founder of Predicting Alpha, Mr. Jordan Wrong. What's going on, Jordan?
How's it going today, guys? Yeah, doing all right. Happy Friday.
Yeah, I thought it was an extra special Friday for some reason, man.
Oh, it is. We had a nice little punt.
A little punt payoff today.
Night. Yeah, definitely. You want to tell the story there?
I think you tell better, man. Let's hear it.
Yeah. We decided to buy a bunch of these puts on STNE before the earnings yesterday or last night, and there was mild research that went into it. It was more of just like a punt than anything. And next thing you know, the stock opens down 10%. So, every time a punt plays out, you gotta have a good laugh and just enjoy being lucky,
Exactly. Hey, man, come on. It was all skill. You already know. Like,
exactly, right?
The amount of research that went into it.
Exactly.
We deserve to get paid. That's why we did. So guys, the way I wanted to have this live set up is I wanted it to be more of a Q&A style. Right? I know we have some new people on the live here, and I'm sure there's a lot of questions floating around. Dan, what's going on, man? Good to see you. So as we go through this live, Jordan and I are just going to talk about trading a bit, but please drop your questions in. I would prefer for this to be more interactive. We want to make these Friday lives more of a, either a Q&A or a talk about like trading philosophy or, how to get better at trading. And then we'll leave Monday to Thursday more so about what am I looking at this week. We have a lot of, cool things coming out in the near future that'll really help with trade ideas for the week. So we don't need to worry too much about Fridays focusing on the market itself. Let's talk about trading. So yeah, please drop your questions in the chat as we go. I would love to be able to get to them.
Yeah, let's see what's happening today.
Well, Qs are down,
Qs down 2%. That's gotta be working out pretty nice, eh?
Yeah, I still have those 132 flies on, man. It's are they printing? Let me check. They're printing a little bit, but we need it to come down another percent or two, and then I'll be locking in some gains.
Nice.
How do you feel about punting, Jordan? Well, how do you define punting?
I think it's just when so sometimes like when you're punting, but the scary thing is a lot of people don't know when they're punting.
So start off with a definition of punting.
Yeah, I'd say like it's placing a trade without thorough research.
Okay, so sort of like the YOLO calls type thing.
Yeah. So, you come into this trade because maybe the risk reward is big, and you're saying to yourself, "I'm going to trade this because X, Y, Z." And in reality, X, Y, Z is not a really good idea. It's just I just kind of want to throw my money out there. I'm kind of getting bored, or
they have all these catalysts coming up. Let me buy a call option.
Yeah, exactly. Sean, I think your mic's a little bit. I don't know. Something changed there. It's a little staticky.
Oh, is it? Here, let me see. Is that a little better?
No, that's okay.
Maybe you guys, let me know if my mic's a little messed up or not. Hopefully, it's not too bad. Yeah, let me know, guys, if I need to fix my mic or something. I can work on it. What's going on, Joey? Mr. Johnson, what's up? By the way, guys, if you have any questions, just drop them in the chat. We want this to be a little more free-flowing.
Yeah, so I would say that's what a punt is.
Okay, here, give me a second. Jordan, I'm going to mute my mic if you want to just keep chatting about that.
Yeah, sure. So yeah, we did a punt on STNE last night, bought some puts going into the earnings event. There was some research that went into it, but at the same time, it's not nearly anywhere close to what to the usual research that goes into our trades. So every time something like that pays off, it's always it's a good laugh, right? Because they're not supposed to pay off. And when they do, it's like, and it's just, and on a Friday as well, it's perfect timing.
You use that's the money you use to buy some beers and stuff.
Yeah, exactly.
How's the mic now, Jordan? A little better?
It's okay.
It's okay.
What are the guys saying there?
Oh, they said it was awful, but hopefully it's a little better now. I hope it is a little better. But if not, I'll just talk less. You'll talk more, Jordan.
All right.
We got a question here from Arnold. Arnold saying, what's the secret sauce when you guys do your research? So let's assume, we have an idea of some sort.
Mm-hmm.
What's the research? Like what makes something a good or bad trade?
Yeah. And it's, sounds kind of cliche that there's no secret sauce. But the answer really is just, I'm actually going to flip the switch here. Arnold, if I came to you and said, hey, Arnold, I will give you this $10 bill for $5. What would you do? Right? You'd obviously take the trade. You're obviously, give me 5 and I'll give you 10. And you're doing a good trade. Right? And I think that's the same in trading. You're doing all this research to try to price something. So in our case, for example, we might price this put option, right? Why did we do a put option instead of a 1-3-2 to the downside, or a 1-2-1 to the downside, or a vertical to the downside? Well, the way we price it is we think, the move is going to be this much. And so because the move is going to be this much, this call option is the best way to take advantage of that. So it really all starts with being able to price it, right? Being able to price what you're trying to trade. And then if it's cheap, you buy it. And if it's expensive, you sell it. And if you're, hopefully in the long run, as you get better and, hopefully, it doesn't take you too long, you're going to start making money. And the beauty about the market is you're going to find out relatively quickly, right? If you're really bad at pricing things, the market is going to let you know, and you're going to lose a lot of money. So that's what I would say there. There's no real secret sauce. It's just, can you try to price this, whatever it is? Maybe it's Apple stock. Maybe it's the volatility on Tesla. Whatever it is, can I price it? And then if it's cheap or expensive, can I find the best way to trade it?
So let's say we're looking at a stock, Jordan, and vols look high. We're trying to figure out if it's expensive. We look at the terminal, we look at the vol cone forecast, all this stuff. We say, okay, it looks a little expensive. But now, we always encourage people to add a level of more qualitative research to it, right? Trying to explain why it would be high or why it would be expensive. So when it comes to that, like, what are key things that you look for when you're looking at maybe the news? How much does that actually play into your decision making? And as people are trying to get better at trading, how should they be using that?
Yeah, maybe I'll give an example to try to paint the picture. Yesterday, it came up on my screen that maybe I should be short GME options, or maybe we should sell GME options, and the longer dated options. And I started looking into it. Everything looked expensive, right? The vols looked expensive versus the realized versus, where it usually is. The stock looked expensive, so maybe we could lean short deltas. And so before I placed the trade, though, I said, okay, let me see who's buying this stuff, right? And when I looked into it, retail participant was less than half of what it usually is. Not what it usually is, sorry, of what it was during the last time it was at $400. Right, so we got $400 a month ago, and we got $400 today, and the retail participation is much different. And so for that reason, I said, well, who the hell's buying this thing, right? If it's not the retail, and obviously retail is playing a small part or a part, but who's buying it? And I couldn't come up with the reason of who would be taking the other side of my trade. And so for that reason, I decided I'm not going to sell vol. I think today it's up like another 15% or something, 20%. So it's stuff like that. I think just really understanding who's trying to understand who's going to be on the other side of your trade and who's really driving the vols.
Yeah, it seems to be one of those things. It's like better questions get better answers. As you get better at trading, you learn to ask better questions about your position, about what you're seeing in the market.
Mm-hmm.
it might start off, it's sort of like that level 1, level 2, level 3 thinking we always talk about, right? Level 1, it's like, oh, the stock has this news coming out, I'm going to buy a call option because I think that's good news. But level 2 would be like, well, what do other people think about this news? And then level 3 might be like, who's actually taking action on this and what actions are they actually taking? And, is it cheap or expensive now? Right. How, would that be sort of a good rule of thumb to go forward with?
Yeah, I think so.
Recognize that, the questions you ask today, can always get better. Right. And as you learn more about the markets, as you keep asking questions, you'll refine how you look at it. And, it just takes time.
Yeah. I 100% agree with that. Hopefully it doesn't take too long though, right?
Yeah. Or cost too much.
Exactly. But I do agree that I think, your questions definitely get better. How you approach situations get better. The way you value something gets better.
Exactly.
If you're learning the right stuff, like if you're not learning the right stuff, if you're just sticking with trend follow or, drawing lines on charts and things like that, you're not going to start out. You're never going to be asking better questions and getting better answers. So as long as you're on the right path, then I think you're just going to get better. I don't personally think trading is taught or is born. I think it's like it can be taught.
So here's a tough one. How do you know if you're learning the right things? Because, one way, that people might measure if they're learning the right things is their returns, right?
Mm-hmm.
I lost money yesterday, but I made money today.
Mm-hmm.
I've been making money the last month doing what I did. You'll always hear now I'm profitable,
mm-hmm.
right? It's always, I don't think I've ever met someone who's not profitable now, because when they're not profitable, they're definitely not talking about it, So how do you actually know if you're getting better?
Definitely P&L is going to be one, but it's going to be a longer term P&L, right? But then also, when you make a good trade, it's a good trade. Like if S&P vol is trading at 40 and Apple vol is trading at 25, and you buy Apple vol and sell S&P vol, well, that's going to be a good trade, right? You can look at all the historical data and that's going to be a good trade. And I think when you know that, you're that's how you're becoming a better trader. It's hard to explain, really, but just like I was talking to Arnold earlier, if I say, hey Arnold, here's $10 for $5, that's a good trade, and I think that's how that you're getting better. It's like you really understand what the hell is going on here. You really understand what your potential P&L is going to look like at the end of the month. I think that's maybe how you're getting better.
Yeah, it's sort of like if you had insider info, legalities aside, right? Just for demonstration purposes, we don't encourage anyone to be trading on insider info. But if you had insider info, you would know that buying or selling, whatever the right action is to take there, is the right move. You know what I mean?
Mm-hmm.
There's no real disputing it. You understand that you are getting a deal here, right? And obviously that's like an extremely high level of confidence, but it's sort of that same feeling. It's like it's a good trade, right? And if you're not getting that from the strategies that you're implementing, where it's like it's a good trade, you need to ask yourself, well, what would make it so that I know it's a good trade? Right. And and it's a tough question to ask sometimes because it's not necessarily just just keep at it. Sometimes it means I might actually have to go out and learn something completely new. Right. You want to run a trend following system, but you can't code. Right. Like a systematic technical analysis system, but you're manually backtesting over a 3-week period with your eyes on a chart.
Mm-hmm. Mm-hmm.
Okay. There's a better way to do this where you would have that confidence, and the ones who win end up taking that leap. So we have a question here from Mogul Productions. It's more so about a position that he's in.
Cool. Let's chat about it.
He says, I had an assignment of LMND stocks at at 140. Stock is currently at 100. I'm thinking about selling covered calls at 140. What's your opinion on that? What do you recommend if a short put position is in the money?
Um,
So we got shares at 140.
yeah,
And stock's currently at 100, and he wants to sell covered calls at 140. I guess is a way to maybe
get some of
offset.
the money back. Mm-hmm.
What's your opinion on that? And do you recommend? What do you recommend if a short put up position is in the money?
Yeah, I think this is a pretty long conversation to have. At any given moment, you need to just take a look at your position, see what your risks are, and understand that that is what view you're expressing. So in your case, for example, you are long shares of LMND. What was it, LMND? Okay, you are long shares of Lemonade. And your expression is that you are very bullish on the stock, right? And so if you are, don't, a lot of traders think in terms of their P&L, like, oh, I'm down, so I'm going to try to do stuff right now to try to make back some of that P&L, right? Or I don't want to really cut a loser. You never sell at a loss, like things like that, where we're really just focusing on our P&L. And that's not the case. This trade would be exactly the same as if you initiated a long LMND position today, right? So you need to ask yourself, if you didn't have this position on, right? Let's say you had no LMND, would you buy shares today? Right? And if the answer is no, that you think there's another opportunity that's better somewhere else, or you're actually bearish on LMND because let's say it broke down, well, then you need to get out of the position, regardless of if you made money or lost money. You need to get out of the position because at the end of the day, you got to keep moving forward and keep putting on these new trade ideas that you think have positive expectancy. You don't want to be stuck holding a bag just because your P&L is down or because your P&L is influencing you. So that's the first question I always tell people, would you be in this position if you didn't have it? In regards to selling the covered call, would you sell an in the money put? Right? A lot of the time people say, hey, I love selling covered calls. And I say, well, would you sell an in the money put on this name? And they say no. Well, it's the exact same position. Right? I honestly, I wouldn't say to sell a covered call here. Right? First off, I'm not too sure what the balls are trading at. I don't have any view on LMND. You need to say, okay, well, what is my view here? And then how can I structure the best position to take advantage of it? So by selling a covered call, right, you are saying that the stock is going to go up, but it's not going to go up a lot. Right? It's going to go up because if it goes through the roof, right, those calls are really going to hinder you, right? They're short delta. They want the stock to go down. Then you have the long shares against it.
Yes, and also, but less than the premium you collected.
Exactly. And the last thing I would say is those 140 calls got to be going for nothing. Right? They got to be going for pennies. It's like, this thing could continue to go down. You need to have your view on the market and you need to try to express it the best possible way.
Good stuff. Yeah, guys, keep dropping your questions in the chat here. Let's keep this conversation going. I hope that helped, Mogul. Sylvain's asking, who's buying? Is it available in IB? I think he's talking about GME.
Sylvain, how are you doing, sir?
GME's back on all the brokerages, right?
In what GME's trading on all the brokerages? I'm unsure. I can't answer that one, Sylvain.
But it is back on IBKR.
Yeah, you can trade on IBKR.
We got a question from a gentleman by the name of Butt Stuff McGriddles.
How's it going, bud?
He said, what's a better call strategy or a better covered call strategy? Selling weeklies or 45 days out and then buying them back halfway through?
Okay. So it's a very important topic. There's no better, right? There's no better. There's always a good time to use one. So here's, for example, a saw is not better than a drill, right? You use the saw in a specific situation and you use a drill in a certain situation. And that is the same for putting on positions, right? There's a lot of ways you can express, a covered call view, right? Or something similar, or let's say a bullish view. There's a lot of different ways you can do that. A covered call being one way, or an in the money put is one way, right? Same thing. In terms of, which might be better on a systematic level, I think I've seen some research where selling the near dated options have a small advantage over the longer dated options, just because gamma is usually a little bit overpriced. That gap risk, right? The gap risk overnight is usually a bit overpriced, or usually more overpriced than, let's say, the back months, where there's that gap risk or that gamma exposure is very small. So I think selling the calls on the weeklies, but then again, you should be trying to test this as best as possible if you're really going to use it as a strategy. Selling the calls on the weekly might have a tiny advantage over selling, let's say, a monthly.
Very cool. Yeah, I think that's the most important thing, right? Like on a systematic level, I guess that makes sense. But wouldn't you also want to look at how they're actually being priced?
Yeah, 100%. Right.
Right. It wouldn't be so black and white, right? It's not, like you're saying, it's not like one's always better than the other or always worse than the other. It's just, every situation's unique, and it's just a different tool, different job.
Mm-hmm. In the monthly example, right? If you want to sell, say, a 45-day or 60-day, I can't remember what he said. If you want to sell, say, a 60-day option, well, you're going to be a lot more exposed to the implied vol level, right? So if your view is the implied volatility is overpriced, well, maybe you want to do the 60-day option. But if your view is, let's say, that gamma or that theta is mispriced, right? That the realized vol is not going to move anywhere. Well, maybe you want to trade those shorter dated options. So it's really your view.
So Jordan, what are a few examples of something that you can systematically do in the option space, right? Where maybe, look, what people should realize with this is, okay, now it's not enough to think you can just do something over and over again and make money. You clearly need to know your product pretty well. It's like, I always bring it back to like the marketing space. You're not going to go buy Tai Lopez's marketing course and become a marketing guru. You're not going to become the chief marketing officer of a company or run $1 million digital marketing agency off of a $500 course you bought and studied for a day. It's just not the reality, because it's a competition. You're out there competing with other people. It's not like you could just memorize how to run a Google ad and make money. But there are ways to capture some risk premiums in the option space more systematically. So for someone who maybe doesn't have the time or the drive or the desire to spend all day learning this stuff and getting really good, what can they do?
Well, there are some strategies, right? Some risk premiums that you can harvest, like buying equity, for example, or that's a risk premium that you're harvesting. In the option game, there's something called the variance risk premium. And that usually means that on average, options are overpriced. And usually this is very true in indexes. That being said, though, we're going into like a lower interest rate environment. We are in a lower interest rate environment. And so we started to see that variance risk premium kind of dry up, and that's just because people are searching for yield, right? They need to get some money, and so they're selling options. But I would say, yeah, try to harvest the risk premiums. So, selling slightly out of the money put options. Those should return you 9% a year, 10% a year, right? And at least historically. So you can do that, right? You can sell some of these options and try to get some, risk premium from there. But you can't be silly about it. Like I remember, Sean, a funny story. When I first got into options, I read the option selling book. Those guys that blew up.
Who was it again?
Options. I think it's optionselling.com.
Oh, the guy with the really sad.
Yeah, that's a sad story.
He's crying with his like $100,000 Rolex on, telling his investors to lost all their money.
Yeah. After reading that book, I used to ask questions like, how much money do I need to sell options for a living? Like those are the type of questions. That was like the mentality I was in. And you don't really want to think about that, right? If you don't have the time to trade, I would honestly say invest. Like, be a longer term investor. Try to capture risk premiums.
Mm-hmm. Yeah, makes a lot of sense. Guys, let's keep the questions coming. I think this has been pretty fun discussion. I see we have 18 people on the stream right now. I want to thank you all for hanging out with us today. But I'm only seeing 2 or 3 people asking questions. I'm sure you guys have some, so drop them in the chat. Also, I don't know if he's on the stream. I think he might be, but I want to give a shout out to Nanad. He just signed up for PA. I'll be in touch with you soon, man.
Nanad, awesome. Nice to have you on the team, man.
Trent's asking, can you find this risk premia in single name equities as well? Talking about variance risk premium.
Yes. Usually, the risk premium is stronger in ETFs, and there's a few risk premiums you can harvest, like the implied correlation premium, right? When stocks go down, the correlation increases, and that's going to be embedded in the ETF, right? Which is a reason why. Yeah, right. Which is the reason why you see those out of the money puts have higher implied vol than, let's say, an out of the money call option, right? Because that implied vol is going to increase as it drops. So there's a couple, at least the research shows, Trent, that selling premium in ETFs, in indexes, returns a higher yield than on single names. Now, that being said, you can find them anywhere.
Would that be if you were doing it sort of blindly?
Yeah.
Is that what the research is for?
Yeah.
So, but there must be, there must be factors you can apply to your decision making.
Yes.
Like this is pretty much all we do, right?
Yeah.
We're trying to price the risk premium.
Right.
That's really the game of options, right? We're always trying. I always say, like, the game never changed. You want to buy cheap things and sell expensive things. It's always been that. It's always going to be like that because, the hard part is actually knowing what's cheap or expensive.
Mm-hmm.
Right. Because what the thing is like something that you might think is cheap, someone else might think is expensive. Right. And someone else might think it for a different, different reasons. Right. It's sort of like, you remember, Jordan, we always had that thing. It's like, trading can literally be thought of as this. I have this marker, and then Jordan comes up to me and says, hey man, I'll buy that marker from you for $100. And now I sit here and I go, wow, I bought this marker for 50 cents at the dollar store. And I think I can probably just go buy another one of these markers for 50 cents. Hell yeah, man. I maybe I'll give you the marker. I'll sell you the marker because I think it's cheap. But, this is where trading gets kind of cool. It's like, maybe this marker is worth way more than $100 to Jordan. Maybe, Jordan, I think that's what he said, is like, maybe this is like the final piece of a time machine he's building, and it has to be this particular marker. All of a sudden, if now as a trader, if I had thought about that, I'd want to sit here and say, actually, if I know what he wanted it for, I could probably charge him $1,000 for the marker. So it was actually what looked like a good trade at first. It's actually a bad trade for me to sell it for $100. Just because I'm making money on it doesn't make it a good trade. I could have made so much more. Right? So we're trying to price things cheap and expensive, and also understand why it's cheap or expensive, what our fair value is, and then trade it accordingly.
That's really well said, man. I really like that.
Yeah, it's real. It's all you, man. It's all you.
Speaking of time machine, I got to get back to that project.
Which one? The time machine?
The time machine project. I've been putting that on. I put that on pause for a little while.
Yeah, man, we got to go back 10 years and buy some Bitcoin.
Yep.
Okay, we got a few questions here in the chat. Our buddy Butt Stuff McGriddle is back at it again with a few questions. He said,
Kyle, eh?
Is it?
I think so.
Wouldn't be surprised, would you? No.
I wouldn't be surprised at all.
He said, what's the correlation between bond yields and big tech?
I can't answer that on this live. I can't answer that on this live because I have not looked into it.
Mm-hmm.
I have not looked into it. But you can, if you have the time, you can quickly get interest rate data from the Fed, or from Fred.com. Um, and then you just pull in some equity data. Let's say big tech, maybe get, I don't know, pull in some NASDAQ, maybe pull in ARC data, and then just run the returns of the interest rates versus the ETF returns, and you'll be able to see the correlation there.
D Torres is asking, what's the best indicators or cues to find stocks with momentum?
To find stocks with momentum.
So if you were to build a strategy, what factors would you look?
Well, I'd want to see, okay, is it near the 52-week high? Right, that's going to tell you if it's been moving up. Maybe you can do, let's say, an RSI overlay on top of it, right? If it's at the top of the RSI, that means there's a ton of momentum. But usually, a lot of the momentum studies are for longer periods, like 1 year periods, right? If it goes up a lot this year, it's likely to go up a lot next year. So I don't know what time frame you'd be looking at, but the RSI example would definitely be on a shorter time frame. 52-week high is probably on a longer time frame. That's probably what I would use. Is it near a 52-week high?
So, okay, cool. Yeah, D Torres, if you have a follow up to that, feel free to drop in the chat. We have another question from him as well. We'll get to it in 1 second. Because I got one I want to jump to here, Jordan. I told you this was coming. Arnold's asking, when will the news and sentiment section be back in the terminal?
It'll come, Arnold. It'll come. We're working on some stuff. We're working on a couple of kinks and some. We want to provide the best data possible, and we are trying to find a really good source for that.
So our buddy Butt Stuff McGriddles has another question for us. He's asking, do you guys work full time? What's your general investing strategy?
Yeah. So we trade full time. That's what we do, and then we also do predicting alpha. Right. I'm more on the software side, and Sean is more, dealing with the client side. So that and with trading, we do have enough time to trade, and so we don't really invest in terms of we try to wherever we can make the most money is where we're going to allocate our capital. And so if we can find a strategy that's yielding a lot, we want to be putting as much money as possible into that strategy. And so for that reason, I don't think I've done a long-term investment in a while.
Yeah, for sure.
Yeah. So I guess super quick, Sean, actually, I guess the philosophy would be put the money where it can make the most. Put your money where it can make the most. And that's really it.
Yeah, it's funny. Like we joke about it sometimes, Jordan, where some of the big guru guys, they'll be like, you should be moving money from your trading account to your investing account every month. Yeah. You're making 15% a week in your trading account, right? If you follow my strategies, you'll make 2% a day, 1% a day. But you should be putting it into 8% a year.
Yeah, exactly. Wait
a minute.
Yeah. That's
like Apple, where I could put millions of dollars into it. Wait, what's going on here?
Yeah, it's definitely a surefire way to see if someone's a fraud or not, right? It's if they can generate you 5% a month, why in God's name, or let's say 10% a month, why in God's name would you be taking money out of the markets, out of that strategy, and putting it into something that's going to make 8% a year, your long-term portfolio? I think that's just like ludicrous. It's not good business advice.
Diversification. What would you say to that?
I'd say no. I'd say if you're hitting that kind of edge, you got to hit it as hard as you can. You can't be pulling money out. That's really bad business. And those guys get people who are bad at business get crushed in the markets. If you're not worried about your transaction costs, if you're not worried about your overhead, your data fees, your living expenses, every single piece of the pie, if you're not worried about those, you're going to get crucified.
Our buddy Butt Stuff saying that he just found your Twitter and he's going to give you a follow. He says he likes your Twitter.
Wow, dude, that's That just topped off my day, man. That was the cherry on the cake. I needed to hear that.
Yeah. Thanks for that, man. I've been motivated. I'm trying to get him to post more on Twitter. That's good stuff. So we have another question here from D Torres. Guys, keep the questions rolling in. We'll do another 10 minutes here, Jordan.
Yep.
So we'll do another 10 minutes, and we'll try to focus fully on your questions. So please ask away. If not, we're gonna, we'll always find something to talk about. But I'd rather it be from you guys. So D Torres is asking, when selling options, how do you manage losers? Example: I sold a put credit spread, and the underlying starts reversing from an uptrend.
Mm-hmm. So before you enter any trade, right? This is really important. Before you enter any trade, okay, maybe actually we will take a step back there. We enter a trade because we think it's going to make money. So you put on this put credit spread because you think the stock is going to continue to go up. And you think that the best way to express that view is by selling that put spread. It's not by buying the stock. It's not by buying a call option. The best way to express that view in your situation was by selling that put spread. And that's a totally different topic if it was the best. But now that we've entered the trade, or before we enter this trade, we need to ask ourselves, well, when are we going to be wrong? Right? Where are we wrong? Where were we on the wrong side of this trade? And the thing about trading is you need to understand that. Like, you will be wrong a lot. Right? You will be wrong a lot. Sean posted a huge, I think it was like what, 250% over a 6-month period or 3-month period, whatever it was. And what'd you have? 58% winners?
67%.
67.
It was huge.
Oh man. Like that's big.
The best trader in the history of trading.
And that's big, right? So 35% of the time Sean was wrong. And so if you're not understanding, well, or not, maybe not understanding, but if you're not thinking about, well, where can I be wrong? And when am I wrong? You're going to be in big trouble. You're going to be in spots where it's like, do I close? Do I hold? Well, okay, maybe I see this happening now, and I should now, stay in the position. When you put on the trade, understand where you're wrong. So in that situation, you need to basically have a stop loss or an area where you say, you know what, I was wrong on this position. It actually didn't go up, right? If you imagine you sit in a car and you press on the gas and it starts going backwards, you're not going to keep sitting in the car or like, ask yourself like, I wonder if it's this, or I wonder if it's that. And like, keep holding the gas down. You're going to be like, okay, foot off the pedal. Let me get out of this car. Right. And the same thing is going to be for trading. So I hope that answered your question. The management should actually be done beforehand, before you place the trade.
Nice. And Nanad actually is in the chat, by the way. It's our buddy Mogul Productions. Mogul's been coming to a lot of the lives, checking out a lot of our videos recently. Nanad, really looking forward to having you on the team here, man. I'll get you all set up later today, and we'll set up a call so we can chat. But he also did have a question for us here. He said, do you see any trading opportunities with the current macro situation / Fed policy / future rising inflation / treasury yields, etc.? Do you trade on macro news?
Yeah. So Nanad, one thing you are going to realize in PA is that we don't really trade the macro stuff. In fact, I tell Sean,
some guys in the group do look at that, but
yeah,
we don't.
I tell Sean, I think I'm the worst macro guy in the world. I think I'm the worst macro trader in the world. But what we try to do is we try to find an inefficiency. So where might something be over or underpriced? So for example, let's say a whole bunch of people are coming in and buying S&P 500 volatility. They're buying S&P 500 volatilities like crazy. And nobody's noticing this, but there's an ETF out there that almost has the exact same holdings, but the vol hasn't moved. And so Sean and I would come in and we would say, okay, well, we're going to provide liquidity where the S&P is. We're going to sell vol here, and we're going to go and buy vol on this ETF that is basically the same thing, and no one's really, paying attention to. And that's really what we're trying to do all the time, right? We are not really thinking about like, what's the news? What's this? What's that? It's more like, is there something mispriced? Okay, why might it be mispriced? Let's make it happen. And it's quick. And so that's what that is what we are in the business of. We don't really like to forecast too much. We're just trying to find mispricings.
Mm-hmm. Very cool. All right, guys, listen, we're probably going to wrap up the live stream there. We're 11. It's 11:11 right now. Make a wish, but I hope your wish this live goes on for another 20 minutes because we're going to end it. We'll be back again on Monday, guys. If you enjoyed this, please just drop a like on the video. If we see, similar likes to a number of watchers, we'll know that people enjoyed this and that we should keep doing it. And with that being said, I hope everyone has a really good weekend. Good luck today. A little bit of blood in the streets. So, buy the dip and, just keep buying the dip.
Buy the dip, short the VIX, fuck Bitcoin.
There we go. That's a good way to end it. Have a good weekend, everyone. We'll talk soon.